to give you information on basics of bookkeeping. I hope everyone has a wonderful class.
Hey, good morning, everyone. So glad to be here with you. Welcome, welcome. As more people are coming in, welcome in. Today, I just really want to share with you that this is going to be an interactive class, okay? I don't know what type of, maybe teaching or webinars or presentations you've been in. I like to be interactive. So we're going to use the chat a lot. I'll kind of ask you to put this in the chat, put that in the chat, since I can't see your wonderful faces. So I at least want to kind of see through typing, what your questions might be. We'll talk about some things that are going to be pertaining to your business the best I can. I see in the chat that most of your businesses, I see some digital marketing, I see detailing business, admin offices, far as back office services, wellness. I see some contractors. You guys are doing great. I mean, just to see a whole bunch of entrepreneurs in here, you guys have taken the first step that some people just don't take, just taking the step of faith of stepping out and having a business for yourself. Or if you are like an office manager and you're working for a company, that's great. The more information you can learn about bookkeeping, it's going to be better for you, right? It's going to help you in your position. It'll make you more valuable and knowledgeable. And one thing we're going to do today is not just gather information, right? I want to give you the tools and resources you need in order to apply them. And so we're going to be a little bit interactive. I believe Jenna has given you guys a PDF. So we'll walk through a little bit of example of financial reports. We won't go through all the details, but you'll be able to have that as a tool and resource to bring right back to your desk. And you can say, hey, what is kind of an outline of what my financial statement should look like? And so that's the purpose for today. Another purpose is I want to help you guys to be confident in your financials, right? It's a superpower. When you go into the bank, you go into lenders that are, you want to borrow money for equipment, or for your business or capital. The first thing they're going to ask you is, hey, where are your financials? How clean are your books? And if you can go in there confidently and say, yep, here's my profit loss, here's my balance sheet, they're going to be wowed by that. They're going to say, wow, that's great. And they might even want to give you more money, right? That gives you more credibility because you're knowledgeable and you know what you're looking at and you know what your numbers are. And the key thing, they're clean. So I want to make sure I help you guys to be confident. And of course, be able to educate so then you're empowered and that you know what bookkeeping is and that you can stay on top of it. Okay, excellent. So without further ado, questions, just a heads up, a little housekeeping. What we'll do is when I go through each section, I'll kind of stop and see if you have any questions in the chat. So I'll answer questions as we go. I'll read the questions so then everybody can hear what the question is because it may pertain to you. And then, of course, I'll answer it. And then if you have a little bit of feedback, then I'll kind of conversate with you. So I'll do the best I can to make sure I stay up with the questions in the chat. Okay, so if you guys are ready, go ahead and put me in the chat. All right, you guys ready? Let's do this. Let's learn a little bit, about bookkeeping. What is bookkeeping? Let me see the me in the chat. Okay, this is good. This is good. I see a lot of interaction. Everybody's ready. We're excited. We're pumped. All right, we're going to be here for 2 hours. Okay, so we're going to get to know each other a little bit. All right, excellent. All right, so without further ado, let me go ahead and share my screen with you guys. All right, if you can see the screen, please put a 1 in the chat. Let's just put a 1, something simple so that I can just quickly see, everybody can see. Okay, it should say basics of bookkeeping for your small business. All right, fantastic. All right, thank you. That's very helpful. Okay, excellent. All right, so welcome to the basics of bookkeeping for your small business. Like I mentioned before, we're going to walk through a little bit of the key concepts, and the purpose is to help the business owners to be confident in their financials. Oh. Okay, there we go. All right, couple statistics. In 2019, QuickBooks did a survey and found about 40% of small business owners don't keep regular up-to-date financial records. Now, you're probably going to sit in your chair throughout this and be squirming and be like, oh, this is me. That's okay. You know what I'm saying? You're not alone. There's 40%, right, of small business owners that do that. It happens. It's one of those things in business. You rather do your marketing, you rather do all types of networking, but bookkeeping kind of gets shoved in a drawer at the end of the year, and then all this paper spills out. All right, so according in 2021, a survey done by National Small Business Association, 40% of small business owners admit not tracking their financials properly or using accounting software. And we'll talk a little bit about that today, what accounting software. There are a bunch, but there's only a couple that I recommend to use. And then in 2020, QuickBooks did a survey and found about 40% of small business owners do not use accounting software. Got to get away from using Excel. It's just not as efficient. Excel has its place, but not when you're trying to run a business and, you know, you're kind of having many different hats. Definitely need something to help you keep things on track. All right. Accounting is the language of business. Favorite Warren Buffett. Believe it or not, he is correct. All right, excellent. All right, so let's just kind of touch a little bit of the basics of bookkeeping. So what is it? So in general, you're just recording, organizing different transactions and for different purposes, right? It's kind of bringing all your receipts, all your income together in one spot and keeping it, you know, in one area and keeping it straight. All right, another thing is gathering financial statements. So what do we gather, right? We have financial records, various financial records as statements, and they provide a clear picture of the business. So if you're not really sure where the direction of your business is going, or you have all these plans and these visions for it, then everything boils down to the numbers, right? The numbers don't lie. And so in order to know where your business is or where you want to grow, you need to make sure everything is gathered correctly in your financial documents. Then once you have everything gathered, recording it, right? Recording it is just a means to document the exchange or the business. Also involves a system, right? Noting down all income, expenses, purchases, other financial activities to make sure each transaction is captured, and with accounting standards. Okay. Yes, there are very specific accounting standards in recording it correctly, just so you don't have the IRS knocking at your door. All right. And then preparing the financial statements. So once you get everything together, where does it all go, right? What is the balance sheet? What is the income statement? What's the cash flow statement? What goes into each of those reports and why are they important? All right. Oh, sorry about that. Okay, excellent. All right, so bookkeeping process. So now we understand bookkeeping a little bit. We know what we need. So now we got everything. Now we need to go ahead and record it. What's the process of bookkeeping? So of course, recording transactions, understanding what a debit or credit is. Journal entries can get a little deep, kind of more for like accountants or CPAs, but it is tracked a little bit different, right? Debits and credits are a little bit different on the profit and loss versus the balance sheet. Then categorizing the transactions. You might hear this a lot. Maybe some of you are already using QuickBooks. Maybe you're using Wave accounting or Xero. A lot of times you have to take those transactions. They don't just go into the reports. You have to categorize them into the right spot. Then posting to the general ledger, transferring journal entries, right? Where do they go? That's something more of a manual process, but there might be people in this room that know what journal entries are. Sometimes you have to put things in manually. So that's another bookkeeping process. And then reconciling accounts. So not only is it important to categorize it, and a lot of business owners miss this. They'll say, oh, okay, I put everything in, it's in the report. Reconciling is really just taking the bank statement. Think of the old school, I used to do this, right? I used to have my bank statement. I used to actually have that blue book. I don't know if you guys remember that blue banking book where you write your income was X, right? And I took out gas and groceries and then I knew how much was left. Yes, I used to use that. And I'm not as aged as maybe I look, but I just kind of grew up with that mindset of reconciling the account. And so that is a separate feature or transaction, that is important to do. All right. So put 2 in the chat if you actually used the recording book back in the day, the blue book or black book that I was talking about. Put 2 in the chat. Okay. Yeah, I'm not the only one. That's okay. There's no shame in your game. That's for sure. Some of you guys might still use it, which is okay. There's nothing wrong with that. You don't have to confess that. Oh, you were in your teens? Okay, Brittany, I see you. All right. You still do that? Oh, you still do. You just don't balance it. Okay, Kristen, I see you. Okay. It helps, sometimes we're using our debit card, right? And we're like, okay, do this. And then you kind of probably do the numbers in your head of how much you have left. And then, oops, I went negative. But if you had some type of book or something, maybe just jotting it down, it can help eliminate that. So, okay, that's cool. It's good to see you guys do that. All right, excellent. Let's move on. Oh. Okay. So key bookkeeping concepts and practices. So now we got an idea of what is bookkeeping, what are some of the, transactions that kind of go into it. So now there's concepts of bookkeeping besides just categorizing and statements. So there's different accounting periods. Some of you might be already doing this. Some of you might be new to this. So accounting periods is either monthly, quarterly, or annual reporting. Now, it's highly recommended, of course, to have your accounting period be monthly, right? You want to make sure you're categorizing everything, you're reconciling everything on a monthly basis. So then what's happening is month by month, you're looking at your business and you're seeing, okay, how much did I make or did I not make? How much expenses did I spend? Did I overspend? Did I not spend a lot? And then what's the leftovers, right? And we're going to walk through that. What's the net income? So then you're making decisions on a monthly basis. Quarterly isn't bad. Sometimes business owners get busy, or maybe you have a bookkeeper that's helping you and, for whatever reason, they're only doing it quarterly. So then you're looking at the business at a quarterly basis. But definitely recommend the more you do it, the more you look at it, the better business decisions you can make, the quicker you can make them too. You don't need to wait to the end of the year and say, oh yeah, I should have done this, or I could have made more money if I knew I wasn't making money here or there, especially with contractors, construction, the restaurant industry, or if you're selling a product, right? A retail store, you want to know on a monthly basis, how did I do selling these products, right? That you have listed out. Do you want to put a sale on? Do you not want to put a sale? Do you need to order more? And of course, there's annual reporting that some businesses do as well too. Then you have what's called cash basis accounting. All that really is just when cash exchanges the hand. So that's going to be more of your product businesses, even some of the service, maybe, lawn mowing can be one, or of course, any trying to think renovations, if you do something like a plumber comes in just for the day or somebody fixes your appliances, that might be a cash basis where you're done with the service immediately and you're paying for it. Then you have the second one, it's called accrual basis. So that's when it's earned or incurred. All that means is, especially for the construction industry or the contractors, hey, we're putting a roof on. It could take, I don't know, maybe a month or two. We're going to have put 50% down now, and then we'll collect the rest once the job is done. So they're not, doing the service right away. It's over a period of time. And so it's accrued. And so they'll collect the rest of the money. And at the end, that's when the money is accounted for when the job is done. So those are the big industries that do accrual basis. Consistency. All that really means is just ensure everything, the financial reporting. I come across a lot of business owners, unfortunately, even recently, I had a couple, October 15th was the extension deadline, and there was a lot of expenses missed because of inaccuracies, right? Either depreciation was not accounted for, interest wasn't accounted for. I paid a whole bunch of taxes to my accountant, but the books weren't even cleaned up. I actually just had a client yesterday that I went to go do some consulting. She thought all her QuickBooks was set up, and it was not. you know what I'm saying, they didn't reconcile, they didn't put all the categories in, but they told her last minute she owed all this money. So definitely consistency, ensuring that your financial reports are accurate. And then tax prep. Tax prep is key. Tax prep can be done throughout the year, right? You probably hear people say, okay, I bought a vehicle, I need to buy some equipment. You know, are you putting that on the balance sheet? So we'll go over that in a moment. But the balance sheet is where you're going to put all your fixed assets. You know, anything that's $2,500 or more. So one piece of equipment that you bought at $2,500 or more can be considered a depreciation expense to put on your balance sheet, and your CPA can take a write-off on that. So tax prep can go many different ways, making sure your 1099s are done at the end of the year. For those that may not know what a 1099 is, it's anytime you're paying for a service that's $600 or more. So you own a business, you have a guy mowing your lawn, you have landscaping, you're paying for that service. You have someone come out and fix and put a whole, you know, I don't know, air conditioning unit, and it's a business and you paid $1,000. He's a subcontractor, right? That's a 1099. You paid over $600 for that service. Another thing, tax prep, is mileage. Mileage is key as well too. Some of you may already know that, some may not. So definitely tracking your mileage. There's some really great apps called Mile IQ is a really great app for that. If you have the QuickBooks online version, download the app. It has a great mileage app piece to the app as well too. And so all of those are tax prep things that you guys can be doing to, of course, to reduce how much taxes that you guys pay. All right, by show of in the chat, any questions at this point? I know we kind of touched base on the concepts. We talked a little bit about what bookkeeping is. Oh, I see, Grace, you have spreadsheets. That's okay. No judgment here. You are good to go. Okay. Oh, all right. Question. What's your recommendation for mileage tracking? How does that help? Okay, great question. So recommendations, so not necessarily all businesses need to track mileage. If you are just going, you know, even home office, okay, you have a home office and most of your work is, you know, at home, and you don't have like an office where you can go to meet clients. Networking. If you're out networking, definitely track your mileage for that. If you're picking up supplies for your business, track your mileage for that. If you happen to meet clients out in public, you know, maybe you're going for coffee or for a meal, you know, track your mileage for that. Definitely any type of contractors, you have your own business, you're all over the place. So there is a template that I personally use for clients, but you can do, it's a real simple template. All you can do is take the mileage that you had at the beginning of the year, take the mileage at the end of the year. This is really simple. If you want to take notes, go ahead. So mileage beginning of the year, mileage at the end of the year. So 12/31, your mileage. Figure out how many miles you drive per year. Okay, so say you drive 20,000. You don't know what your mileage is beginning of the year. That's fine. 12/31, you get your mileage. Okay, we'll say your mileage is 100,000 miles. Okay, end of 12/31. You drive 20,000 a year. So we can say your beginning mileage is 80,000. Okay, so January 1 was 80, December 2031 is 100,000. Out of those 20,000 miles, what percentage of your vehicle do you use for business? Right? So say you say, well, I'm a contractor and I'm all over the place. I use 80% of my vehicle, you know what I'm saying, for business. So you take that 20,000 miles that you've driven for the whole year, times it by 80%, because that's how much is business. So 16,000 miles would be your mileage, your business mileage for that vehicle. That $16,000 number is what you give to the CPA. And then when you give him, he might ask you for all of it. He's probably going to want to know the beginning, ending, right, and how much you drive. And so then he'll take that 16,000 miles and then they calculate it, whatever the rate is, the federal rate, and then turn that into a dollar amount for a credit. Does that help? I think that's what was your question. Okay, recommendation for my, and how does that help? Yes. It's a great tax write-off, you know what I'm saying, at the end of the year, and it helps tremendously. Even if you use your card 20%, you know what I'm saying, of the year. Anything outside from going directly to your office is considered a mileage expense. Okay, excellent. Yes, Lori, you're right. Mileage is important in your business. You got it. Okay, Laura, question. What is the relationship between bookkeepers and CPAs? Do CPAs typically take input from bookkeepers and you consult them once a year, whereas a bookkeeper is monthly categorizing your finances? Okay, I get this one often. The relationship between the bookkeeper and CPA should be like peanut butter and jelly, right? They both have their own flavor, right? They both have their own way of doing it, but when they come together, they work together, you know, and be able to help the client. So the bookkeeper is going to be more in the details. Now, I tell everybody this, if there's CPAs on here, you guys are awesome. I'm not going to say anything bad, but CPAs are not necessarily designed to do bookkeeping. Now, if they have a CPA office and they have people in the office just doing bookkeeping, that's fantastic. Bookkeepers, we're more in the details, right? Not, I don't want to say the weeds, but we're in the details, right? We're talking to you regularly. We're getting all the expenses together. Like I said, we're making sure your balance sheet, all the equipment, everything's set up. We might say, oh, hey, your expenses were a little bit higher than it was the previous month. How come? What's going on? What can we do? All that stuff like that. What cash? Cash is big. If you buy expenses with cash and you're not recording it, you're missing out on a tax reduction, right? So you buy a whole bunch of supplies or expenses in cash, the bookkeeper should be helping you to gather all that, so then it reduces how much taxes you pay. CPAs, they're more big picture. Hey, give me all your receipts, typically at the end of the year. Maybe they'll work with you during the year. Okay, we're going to put it in our software and everything is all set. And okay, they might ask some questions, right? And then voila, this is how much that you owe. They may not take as much time in asking the questions that the bookkeeper would to make sure your loans are set up, or, you know, they will ask about depreciation, they will ask about your interest, things like that. But they don't get into the details of it to ask more questions to make sure, you know, they can reduce it as much as possible. So do CPAs typically take inputs? Yes, they do. I have some great CPA partnerships. You know, they'll kind of say, hey, what's going on here with the books? You know, the bookkeeper should be knowing what's going on a monthly basis. So yes, absolutely. They'll take input and we'll consult each other. Whereas bookkeepers are monthly, correct. Bookkeepers more monthly. CPA may not be as much monthly. They might be once or twice a year, or definitely at the end of the year. But good question. All right, Sarah, what kind of recording do you make? I'm sorry, what kind of recording? Okay, what kind of recording do you make? Name of a client and purpose. Or what type of recording do you make? Name of client and purpose. I think I know what you're saying. Hold on one second. What kind of recording do you make? Name of client and purpose. If you're talking about far as recording, you know, far as a client, far as sales, if you're talking about your service or your business, then name of client and purpose. Sarah Johnson, if you can rewrite that, I'm trying to kind of figure out what you're saying, but I'm not exactly sure. And then I'll find you again, okay? All right. Maru. Okay, yeah, excellent. Okay, accrual or cash basis as a trainer, which is best? Some clients buy packages of sessions paid in 1 month, but used up throughout various weeks. Okay, if they're paying on a monthly basis, then that would be cash accounting, cash basis. As a trainer, which is best? Some clients buy packages of sessions, right? Okay, excellent. And then paid in 1 month, but used up. That's okay. They're paying for it right now. You know what I mean? So even if they use the services later, that's okay. It's not like they're paying for half of it now and half of it later. They're paying for all of it. So you would be cash basis. Okay, Sarah, excellent. Thank you. All right, what do you need to record for the purpose of claiming the mileage? Okay, thank you. Do you have to write down who you meet with and where? Okay. Yes and no. So yes, back in my accounting office management days, I remember when there was a fleet of vehicles and I used to have to help the team. And, you have to write down, okay, where you were going, you know what I'm saying, the description, the mileage, all that stuff like that. I have found nowadays most CPAs, unless you're a bigger corporation, maybe like a $25 million company, maybe $10 million, $20 million company higher up, they may need some of the more of those details because there's more accountability. For the small business owner, I would say, with, I don't know, what small businesses of 500 employees or less, 100 employees or less, then not technically. It depends on your business. If you have like a fleet of vehicles, I would recommend doing that. Yes, right? Because you got different staff using the vehicles. You might have to use the clipboard or you can use the app, definitely use the app. And then you can have the name of that employee in the app. So you know which employee, is using that, where they're going, things like that. If you're just more of a business owner and there's a couple of you in the business, then tracking it by yourself is just fine. What do you need to record it? Do you have to write it down? Just the mileage, beginning mileage, ending mileage, and the percentage. You also need the vehicle information. So like the make and model and the year of the vehicle. And then typically the CPA is fine. That's if you are a solopreneur, right? You're by yourself. That's it. If you have employees, then yes, you want to record that a little bit more detailed. Who is it? Where they're going, things like that. So I hope that helps answer your question. Excellent. All right. Please repeat the mileage again. Okay. Jessica, did I already? Okay. I'm running 3 businesses. I would like help. We will not be able to share recording for this class. Oh, okay. That was Jenna. Oh, sorry, Jenna. Okay. I'm running 3 businesses. I would like some help. Okay. So do it for each business. If you have 3 businesses, multiple business, your books should be separate. So that means you would have 3 QuickBooks, 3 separate, packages. If you have the Simple Start, you have 3 of them. You have 3 businesses. Okay, you have 3 different ways or 3 apps for the mileage. Do not intermingle or commingling. That is a big red flag. If you get audited, you will get fined. So do not commingle. Make sure everything is separated. Okay, excellent. All right, let's move on a little bit. I'm in the 40% who don't have a good financial system. I've thought about closing my business and starting over in order to start with a proper financial framework. Is that necessary? It can be established. No, this is Dirt Murphy. No, don't, you don't necessarily need to close out your business in order to start over. Don't do that. If you have a good business and it's flowing, right? You got clients, customers, you've been in it for a couple of years. It's just stopping and getting the financial framework set up correctly. Getting with a good bookkeeper, that can do that for you. I know the college has some great free business consulting in the Small Business Center. I would recommend starting there first. Schedule time for free business consulting, and then they can kind of guide you on saying, okay, let's get your financial set up. And then this is how you can do it. Now, I do contract with the college if you wanted my specific services, but they'll put you in with a good bookkeeper, someone that can get you set up. So no.